What is going on, superstars? Yes. What is going on, superstars? I'm so duper excited for everyone to be on this live. So today lives we are going to be seeing this scalping, and then you use it in your trading routine. So guys, as well, if you can hear me, you can drop down in that live chat so that you can tell me that if you hear me very well. So I would like to welcome everybody from where you are watching this live from. Yeah, it's so super amazing, and it is a new year. We're having new goals. I want to say to everybody that Happy New Year. Happy New Year. Yes, it's a new year, new goals, new everything. So yeah, that is it. As well, now, you know, when we start trading, we always start from the high time frame and we analyze our market. We get our market analysis. So, well, when we are making this market analysis, we have to always start from the high time frame. When we are on the high time frame now, this is trading view for the derive. A derive, they always give us the higher time frame. It is daily time frame. The daily time frame, it is our high time frame. So what we always to come first and foremost to identify the highs and lows of the market, which these highs and lows of the market or of the chart of the any kind of assets which we are trading, they are the one which gives us the market direction, guys. So if you don't have a market direction, what we can call a bias, we cannot do what? We cannot know where to go, whether we are going up or we are going down. We don't know where to go. First and foremost, we always have to identify the bias of the market. So this is VIX 75 is going to be using this pair as an example so that we can implement this simple scalping strategy. As a step number one, what we do as well, we have to identify the market where it is. As well, you can see around this area. Let me do like this. Around this area is where the market is playing from. We can see here and down this area, it's where market has been make its high, and then at around this area here we have our market low, but which means now the daily time frame is showing us that according to this, we have here high, we have a low, we have not broke anywhere, which means we are going sideways the trend. But we scalpers, this does not stop us to make money. What we have to do, we get our vertical line. Our vertical line always helps us to identify our daily open and our daily close. This is our day now. This is our today. So we are here now. What is our daily bias? Our daily bias, it is buy. Why it is a buy? Because the daily, it is on a green candle. We have to look for the word for the buy. Yesterday it was sell. Yesterday, but one, it was yesterday, but one. How do they call it? Okay. This day it was green, this day was red, this day red, this day green. So we always move with this bias daily. So as long as we have a daily bias, what we have to do, we're diving into minute 15. As well, we are waiting our chart to load so that we can see. Yes. Duper. As well, we are moving on. Bro, where are you watching from? This live, you can drop your location where you are watching this live. So we are here to connect, we are here to make things happen. So we are on minute 5 as well, you can see. So when we come in it is minute 15. When we come in minute 15, remember our daily bias, it is buy. So what we have to do, we have to identify some structures that have been taken out yesterday, structures that has been taken out. They are the one which gives us setup. Are you getting the point? They are the one which gives us the setup. Let me do like this. I hope you can see very well the chart. So this, it is our minute 15 chart, and this here, it is our daily separator, which we marked in our daily. And remember, our daily, it was green, or it is blue, so that shows we are looking for the buy. So we have to identify the structures that yesterday got broken. Yesterday here we had a high, and then we had here a low. This low was taken yesterday, and then we come the price take this this high here, like that. This high here was taken there, and then this down high here, this down low here was also taken. So this is what gives us the setup. Are you getting the point? So after identifying this, we have to wait the market come to our killer zone. Where do we get our killer zone? We have here two killer zone. The first killer zone here, we have what? We have our support, or what we can call our order block, like this. We mark the last selling candle from its week up to the down week side, like that, and then we bring it to the future at around this area here, like that. All of this, it is our minute 15 order block. So another area, what we have here, we can come here to line chart, and we do like this. We find another area, but the market, you see here, made a high, it made a low. Here we had an equal. Sorry, is this equal? Let me do like this. No, it's not equal. This, it is lower, this is, it is higher than this. So what we have to do, our line here, we mark this previous low here, like that. Also, that is going to be our killer strategy. Our killer zone. We do like that. So we come back to our line chart. So now the VIX 75 analysis is done. The role now, it is now to wait the market come and making the lower lows until it hits this area. Are you getting the point? Until it hits this area. When it hits this area, what we will have to do, we will go to minute 5. We will drop down to M5. Let me go to M5. So, and we see exactly so as well, you can see at around this area. So what we have to wait here to happen, it's the same thing like what happened around this area. Are you getting? I want you to see that this, the pullback, this simple pullback here, you can see that we had this here, that is our order block, and then the market came, tapped inside of it, order block. Are you getting the point? After tapping it in that order block, then we had to what? We had to take our sale opportunities. So this happens, it's what we have to wait around this area, so that whenever it happens, and then we take for the buy. Are you getting the point? Now 75, we are waiting something here, the market to come and making lower lows and lower highs like that, until it taps to this area here. When it comes to this area is when we are going to wait that the market come and take off this high here, which leads to tap into our how do they call it, this area? Okay, to come and enter on our order block, in our order block. Oh, there is a word which I wanted to use, but English it have come hard for me. Okay, our interested area. Yes, here. So when the market comes here, what we have to do, we have to wait the market come up and takes up this. So when it takes this here, like that, after the market taking that, we have to find an order block around this area, which means that is going to be M5. Are you getting the point? M5 order block here, then the market will come back to this area, or to mitigate any favorable gap around the side, we execute and then we take the market up. So that is always what we have to do. Where to target? We have to target this area here is going to be our target. So this is the setup. This is the setup. What we have to wait. We have to give the market the time to see that it comes to this area. So when it comes around this area, is going to be our entry point, and this one is going to be our target. That is 75 index. Yeah. Simple and easy strategy that you can always be used, and then you make the bag. Yeah man. If you have a question, drop it in the chat so that I can answer you, bro. You can drop your question there. I'm ready to highlight them out, and then I will answer you. So let us go to look another pair. We are using the same concept. So let me do like this. We are going to bring out a VIX 10. If you love VIX 10, yes. We go to higher time frame, that is our daily time frame, and then we clean everything. Whenever we come to the daily time frame, you know what we have to do. It's just to look for the daily bias. Now our daily bias we have today, it is a sell. We get our line chart. Our line, we mark like that. We go directly to M dominant 15. So we are in minute 15 as well. What we have to do, we do like this. So yesterday, when this minute 15 was coming, and then the day yesterday closed here, we had here a big move, come back and then go down, we have failed to break above this low. We kept respecting it, and even this day opens, so we are still going down. This is the structure here we have. If I can see very well, we can see that we took this low here. After that low get taken, and then also we took this low here. Before we take this low, but we had to take this, which leads this move down. We took it up like that. So if you love to trade this VIX 10, what you have to do, this is our interest point area here. This is going to be our interested point. We are going to look for the sell. So we have to wait the market pulls back here. Are you getting the point? Enter here, come and takes this low in minute 5. After taking that low, it will pull back to mitigate the minute 5 order block, or to minute 5 favorable gap like that, and then we bring the market down. This is going to be our overall target. So that is what we are to be waiting for also in this VIX 10. That is the setup what we have. Are you getting the point? We have to wait. So let us pull out another. We are going to jump 150. We are pulling out 150. We go to the high time frame as well. 150, our daily bias, it is sell. Let me clean everything here. We go to minute 15. Yes, we are looking for the sell. So minute 15, it's showing us we took low this here, and then this high also was taken. If we can see like that, we created a high here, we made a low, we made a high, we broke above, and then we take this low, which means now we are going down. Where to take any entry? We have to wait the market pulls back to these regions here, to this area here. we have to wait the market pulls back to this area, to these areas here. So market, when it comes back to this area, it's when we are going to take what? To take our sales. So that is. So we have to drop down to minute 5 and we see if we have a good thing here. What we have, let me do like this. Yes, we have here a kill zone. What you can see, it's around this area, because we have here high, we had a low, we had a high. We take this high and then we take this low. We have here a sniper entry zone that we can mark it like, and we give it green. Oh, let me give it that color. So this is going to be our sniper entry around this area. I think you can see how we get the sniper entry. So you have to put your pending orders here. The stop loss is going to be above a little bit. We are looking for the sale like that way, and target is going to be around this area. This is going to be our target. That is 6 to 1. Yes. So let us pull another pair here. That is going to be VIX 75-1S. As well, we go to the high time frame. We delete everything here. We look for the buyers, daily buyers. We see it's the sell. We also have to sell here. Get our line, mark at this area. Minute 15. So yesterday, what we had here yesterday, here we made a low, we made a high, we made the equal lows. Let me see, was this equal? Yes, these ones they are equal. These ones they are equal. So and then we have took them right now at around this area. We have just took them right now at around this area, and then remember here inside we took this high here. It was gone off, and you can see the market came very well, push down, push up, push down, and then it takes off this low. The market came back, so we have to wait, and it comes back for the second time here at around this area also. Or it can also come to this area, because this order block here, it is already mitigated, and then we have to wait this one which has not been mitigated. So we have two regions. We have this and also we have this. We have to wait all of them to see the market comes back here, and then we take it down. So that is the strategy that always what you have to be implementing day by day. I'm so super glad for those who have been around here. So most of you have been asking flipping. So if you want to flip, and then you have a small account, what we have to do, you always do like this. Let me clean everything. You always do like this. If you want to flip your account, this is flipping. If you want to flip, what we have to do, you have to get at least like $50. So if you get $50, you deposit on your trading account, any broker what you love to use, maybe in Forex, maybe in what. So if you're flipping, so what you have to do, you have to transfer $5 to your MT5, $5. So if you lose this $5, you will come for you will be remaining with $45, and then this will help you to keep moving. Keep that in mind. But in your MT5, deposit just $5. When you deposit those $5, so what you have to do, you have to come like this. You mine high time frame is always going to be minute 5. Is going to be your high time frame. M5. Are you getting the point? So what we need here on M5, we are going to be looking something like this. The market made high, made lows, made highs, made lows. When it reach there, and then it make what? A consolidation. So when you use a consolidation is when we are going to be looking this. It is going to be our setup. After that's happened, we wait the market either to break down or to break above with M5 candle. Are you getting the point? So after that M5 candle breaks this consolidation and then close above of this consolidation or below this consolidation, this is going to be our entry point. Are you getting the point? M5 candle, after moving on its consolidation, it's going to be our entry point. Are you getting the point? So let us go to the past examples here, and then I show you. You see M5, not to use any time frame except minute 5. So we can see we have to highlight the arranging period. You can see here we had what? Here we had arranging period at around the area. Are you getting the point? So after reaching here, this is a flipping strategy. We blow it, the account, or we make the money. That's the rule of flipping. If you know you can't blow your money, you have only that money, bro, don't try this strategy because it will kill you. So do you see? After minute 5, you can see this is the consolidation of M5, and then after M5 candle close above this consolidation, it's when we execute. It's when we execute here. There, the stop loss is supposed to be this candle which break above. That is going to be our stop loss. Are you getting the point? And then we target 1 to 2 like that. Do you see? 1 to 2. Which means we will be in a trade 5 minutes, 10, 15, 20, 25. The tip is hit. Or in just 15 minutes, SL will be hit. Which means you have to risk all $5 the moment you execute here. You risk all $5 with 2 entries, 0.001, 2 entries. Then you wait. So if it comes here, if you lose $5, which means here 2 entries, you make $20. You keep doing the same thing. So that is the first example. Are you getting the point? So always you have to identify the key areas. But the most cases, if you want to be good at this, don't take 1 to 2, just take 1 to 1. Are you getting the point? You lose $5, you make $5, but which means you are going to be having only 1 candle for the minute 5 or 2 candles. They will be enough for you to get 1 to 1. You done. So let us look for another example. This is arranging area here. This is arranging area like that. So you can see that this arranging area market tried to break below, but it failed. Come to break above, it failed until it breaks around here. So when it breaks here, then you execute sell. You can see 1 candle, 2 candles, and then you're out of the market. Are you getting the point? That is the skill. So if we can come also around this area here, you can see we have a arranging area here. So if you can look, this is a good example here. What you can see that you just highlight like that. Let us say that this movement has not yet been happened. You just highlight it like that. You wait, they break above or they break below. After breaking, you execute 1, 2, 3 candles, you're out of the market. So that one who have been asking the flipping strategy is that one. That is one. So if you need for another one, yes, keep with me. I'm going to show you another flipping strategy. So what you have to do, you come to high time frame. This is another scalping strategy. You come for the high time frame. This is going to be H1. When the H1 you see it, you will have to use the trend line. Use the trend line, and then we identify the overall trend of the market. You can see it going up, going down, going up, going down. You do like this. You do like that. So this is our trending channel. So which means we are going to be following the H1 movement. You can see we trade only inside of this. If the market is out, we wait the market to make lower lows and lower highs, and then after getting another trending channel, it's when we will start trading. So also after identifying this, you come back to minute 5. Simple. Let us wait this. So we are on minute 5. So here what you have to do, this is back to back, we have to go with the same direction of what, of high time frame. Our high time frame is is H1. So in minute 5, what we have to do, we have to identify every pullback, and then after that pullback complete, and then we buy. You can see here we have this pullback here at around that area. After then the market breaks above, we execute exactly there, and then we're TP at around this area. You see the stop loss, it is supposed to be there. Yes, that is below this area here. That is 1 to 2. You done. You wait another pullback. We follow with the high time frame. You can see we have a high, you have a low, have the market to break down, to break above. If it break down, you leave. You wait the market to break above. You can see this is the candle which breaks above. Are you getting the point? After that candle breaks above, you execute here, you buy. Stop loss below here, you can see. So you target 1 to 2, and you see the market hit it very well. You can see here we had a pullback, low, high, low. Are you getting the point? You get your trend line like that. You wait this trend line to be broken. You can see that this candle here, if we try to zoom like that, you can see that this candle here didn't break this trend line very well. Are you getting the point? Let us adjust our trend line like this here, like that. You can see that it is the candle which broke this trend line very well. So what we have to do after this M5 close with bullish engulfing, so what we have to do, you execute here like that, and then stop loss below of this candle exactly which broke above like that. This was 1.5. Are you getting the point? You're losing 1 to gain 1.5. That is the strategy. Pullbacks in minute 15. In minute 5, with trading same direction of the high time frame. We are trading with the same direction of the high time frame. So as well, I want to show you something little bit. So I always need, whenever you come to the chart, first and foremost, I want you to learn how to backtest your strategy, the strategy that you're using. So when we are backtesting, we don't need to go back some many days. Just we need also like 30 days, and then you do what, 1 month, it's be enough for us. What we have to do, you come on exactly that month there, you mark it from there, which means from here up to here is going to be enough for us to make our back testing. That is how we back test. Are you getting the point? This also, it will be enough for us. What we study here, it will highlights the characteristics of this pair, how it moves. Are you getting the point? So what we have to do, you come to the minute 30 here. Let me pull out minute 30 like that. Solo. So this is M30. Are you getting the point? M30 for all full months. For the all full months, this is minute 30. So when we are backtesting, we started from the last month up to date. We see which structures that market was respecting. Are you getting the point? And another thing, you have to be knowing the structure, market structures. If you don't know the market structures, that will be also another thing, which means I will make another video so that showing you how to understand the market structures. Now I'm going to give you the invalidation structure. For instance, the market has a behavior of making high, make a low, make high like that, and then come do like that thing and start making the lower lows and lower highs. So that is what we call the market structures. So what do we have here? Here we have this invalidation, what we can call this what invalidation here, and this what I can call a retest structures. Are you getting the point? And this also here I can call it invalidation X. You see, so the market, it always have the ability of come and retest one of these structures. So we have to identify the structures when we are backtesting. So the market can come and retest this invalidation or structure retest or this invalidation X like that, and then it continues going down. Are you getting the point? So when we are making the backtest, you have to identify the behaviors that the market is using to do what? To move recently. So we are going to be looking at the structures that what have been respected. If you can see that here the market was making the low, make the high, make the low, which means here we have here what we call an invalidation. You can see that the market after come, why this structure is invalidation? Because it is invalidated. Here they came they break it. After breaking it, and then so this now, if we can start from here, we can see that the market at around this period, it was respecting market structure, or what we can call that a structure retest. You can see that the market after invalidating this came down and makes what invalidation X, come and also invalidated it and retested this what we can call structure retest. And you can see after retesting this structure retest, it moved down massively. Are you getting the point? Now you can say that this pair have a habit of making what we can call them like double tops, but we can say as well as a structure retest. So we mark that one. You can see we move down. You see we are looking at the behaviors. We are backtesting. That is how we backtest. You can see made a low, made a high, made a low. We made the equal highs here. Do you see that also this was respected? Do you see this here? This and this and this. So here we made a low, we made a low, we made a high, we made a low. We came, we retest this, we come back, and then we retested this invalidation X. You can see here. Do you see that? Invalidation X, and then we come back here also for the third time here. Structure retest. Also down here we had a structure retest, and then we pushed up, we came this side here. If you can use this line here and then we mark this, you can see we respected here invalidation. Are you getting the point? So that is how we are backtesting. After identifying this, you always know that now this time this pair, you can wait it at around this area. If you want to trade, you wait the market until it comes back to this area. For instance, here to this area is when I trade, or to this area is when I trade. So when the market comes back to your killer zones, because you already know that the market, when it comes to this area or this area, it respects them. So you always wait the market. When it comes to this area is when you do what? Is when you implement your strategy. This will help you to not be over trading, or always to keep being in the market. So this is how we do it. Are you getting the point? So when this happens, also you go and then you diving into your strategy. For instance, like WTBS. Let me find the chart. Let me go to minute 5 here a little bit. The chart is going where? I don't know. I'm going to keep it to minute 30 because it's just disturbing. I'm going to give you an example in minute 30, so that, because if I'm trying to pull the minute 15, minute 5, it not comes up. So let's say that this is M5. This is M5. And remember, when we are trading here on M5, so this is our what we, after knowing that the market, it respects these zones, guys. It respects these ones, invalidation and market structure. So after knowing that these are two zones which are get mostly respected, now you see this area, that what I'm telling you, you see that the market at around this area made a low, made a high, made a low, and then comes up, respected this, and then come down, respected this, also invalidation. You see this area here, that it is invalidation. You see the market came very well and respected. So if the market came around this area and then respect you invalidation like that, after knowing that, you diving down to low time frame, that will be minute 1 or minute 5, and then you implement you trading style. You trading style, it can be a trend line breakout, ITC, any trading style after getting this. So as well, what we do after hitting this area, we go to low time frame, and then we look something like this. We wait the market come and hit our killer zone. We wait, it makes a change of what, of trend, change of trend, which means this was a low trend. Are you getting the point? Now the market is heading down. We have to wait the market move from this downtrend to start going to uptrend. Whenever the market breaks this high here, low high here, like that, that will be enough for us to know that here the market has starting to shift from this downtrend, and then we are moving to the uptrend. This will be enough for us. If the market is not going to change, it will respect this low here, sorry, this high here. It will not break it. It will respect it, make a double tops, and then it continues, goes down. But the moment when it pull it up like that and then invalidate it, so we have to wait this area here, because it having the it has the habit of respecting the invalidations. What we have to do in low time frame, we mark this region here, we wait the market to pull back at around this area, we execute, and then we ride the market up. Are you getting the point? So that is, if we can go in the low time frame in minute 1, you see exactly that what I'm showing you here, what I have been showing you here, it is the same thing what have happened inside here. But the moment one I try to pull out this M1, I see it's not coming. I don't see it. Yes, I'm getting you, bro. You. So let us go back to minute 30, so that we can move for another step. I hope those ones who have been asking the flipping strategy, you have learned something, and then I have showed you the way how you can make you back testing, guys. Are you getting the point? How you can back test and how you can read you market. Are you getting the point? So we shall meet for the another live. I'm so duper excited to be with you on this live. We shall meet. God bless. Happy New Year. Man. Yeah. This content, they're going to kill us.